Oil goes to below zero. What does that mean? Are they paying me money to hold oil? The Fed is buying $41 billion in debt every single day. What does that mean? Can we bet against the Fed? Probably not. Kim Jung Un, guess he had heart surgery, throwing some instability into the world while we have a coronavirus. And we always got a little bit of jelly right at the end. Welcome to the Portfolio Bulletin. Let's get started. All right, first things first, oil. What are we going to do about oil? Oil's going to below zero, so let's compare oil to milk. Say you go to the store and they pay you to buy milk. You get the money and the milk because they got so much milk and it's going to be worth something in the future. So in order for them to keep pumping this oil out of the ground without losing money while they're pumping, they have to pay storage facilities to store their oil. So because of that, the USO ETF, which is directly related to oil, will pause trading because it was down to about $3, down from $15. So basically right now, oil is down to about $20 a barrel. It's not a terrible buy if you can get some options, maybe long options. Also, the US is going to add about 75 million barrels to the US reserve. Overall, it's not a huge issue for our economy. Once this Rona situation clears up and oil demand goes up, oil prices will normalize. Somewhere around August, the August price for oil futures is already at $30 a barrel, despite the May futures being negative. This article is pretty much saying exactly what I just said. The demand for oil in May of 2020 is contracting heavily due to everyone being stuck in their houses, not driving around, no one's flying, and the output is still at somewhere at 10 million barrels per day. And Saudi Arabia and Russia were pumping too much oil, and because of all of those things at the same time, it drove oil prices down extremely low. And then once we get to August, the demand will normalize and oil prices should return to normal. When people say that the oil prices went down to negative numbers, this is what they're talking about. Oil crude futures. You can see here they were right around $15 yesterday, and then into the evening they crashed all the way down to looks like negative 39.21-ish, and then they popped right back up to about $21, and then they dipped down. They've currently settled somewhere around $10 or $11. This is a delayed chart, so I think it's down a little bit after this. But it's right around $11, so it's not terrible. Oil's obviously down. If you believe that oil is going to go up in value, it's not a bad time to buy some oil futures. The issue with buying May futures right now for oil is that the IV index, or the implied volatility index, is extremely high. You can see up here it's at 1,400%. Obviously, that's extremely high. It's much higher than it is normally. That's relative to what it is normally. So you can see the IV rank up here is 111%. So with the IV rank being so high, that means that these option prices are going to have a significant amount of premium in order to cover the expected move. This highlighted area is the expected move. This is the current price. This is a live chart. So that's at $13.50 right now. And the expected move is all the way down to maybe $1.50, $1.75, and it could potentially go all the way up to $25.25, and that's in the next 23 days. So there's a high amount of implied volatility right now, and that means you can get a pretty decent premium if you wanted to sell some options on this, but there is a significant risk right now on oil prices. As for the rest of the economy, low oil prices can be beneficial. So on the day-to-day for us driving, having low gas prices is beneficial to our budgets, as well as budgets for the airline industry. Airlines have a lower cost of doing business with low oil prices. So it is beneficial for the rest of the economy outside of the oil market to have low oil prices, which gives them greater discretionary income for consumer spending to stimulate the economy, as it shows here. Conversely, high oil prices add to the cost of doing business. So high oil prices can be a detriment to the economy. In terms of job growth, inside the oil sector, obviously low oil prices are going to reduce their profits, and that's going to be a detriment to them. But the diversity of the U.S. economy is quite large, so low oil prices can work to stimulate the economy in the short term, which is beneficial since we are going through a pretty significant coronavirus situation. Shows the bottom line here. Oil prices do have an impact on the economy, in two different directions. High oil prices can drive job creation in the oil sector. However, it costs more to do other businesses when the prices are high. On to my next topic. The Fed is buying $41 billion in assets every single day. This is what the balance sheets look like just for March. You can see this ridiculous spike. This is all of the G7 groups together in March. It's pretty ridiculous on the scale. So this is why the markets are not going the direction that you think they should be going. When you have the central banks of the G7 purchasing $1.4 trillion in assets in March, nearly 5 times what they purchased in the previous monthly record in April in 2009, that's significant. And that's what's driving up the markets right now. Cumulatively, they own $6.8 trillion in assets. And we don't really know what that means right now. So they have owned a lot of assets coming from the last little recession that we had in 2009, but they haven't been able to offload nearly any of that debt. If you look here, we can see this is the Fed balance sheet in trillions. In the little 2009 blip, we bought a lot of assets. We continued to buy into 2014. We were flat, declined a little bit, and we started selling into the strong bull market. And then we had a little problem right here. And then we started buying, and we topped $5.2 trillion for the first time on the Fed balance sheet. So what does this mean for everybody else? So the Fed balance sheet is extremely complicated. They've continued to buy assets, as we've already talked about. The Fed stacks up assets, and here's another graph that shows exactly what they've been buying. Most of it is Treasury securities from the government. They have some mortgage-backed securities in here. And it looks like they have some unamortized premiums. Unamortized bond premium is the difference between what the bond sold for and the current face value of the bond. It's not extremely important, but just so we understand what's on the Fed balance sheet, this is one of the items. Here you can see some of the loans from the bailouts in the 2009 area. They were eventually paid back, but of course we continued to buy other things. So we had the housing crisis in that same time frame where they're buying these mortgage-backed securities, which I already mentioned. If you keep scrolling down here, it says theoretically there's no limit to the upside that the Fed can take on. This is because they can print money. So if they can continue to print money, they can continue to buy things. So a liability to the Fed is actually all of the currency that's out there. All of the currency in circulation goes on the Fed balance sheet as a debt. So you can see that here. If you take a $100 bill to the Fed, it can very well pay you back in $5 bills like any other combination you like. The Fed can't in any manner be compelled to discharge its liabilities in terms of any other tangible good or service. So basically, all it's good for is exchanging currency. The bottom line is all of us are connected to the Fed balance sheet in one way or another. We all use the currency that the Fed dispenses. But what happens during volatility? Well, the Fed balance sheet continues to grow. And can it actually grow indefinitely without damaging the dollar? Will there be inflation? That remains to be seen. The final thing I wanted to talk about today that's affecting the markets is North Korea's Kim Jung Un is supposedly in grave danger. Pretty sweet picture of him on this white stallion. I guess he's taking after Putin in the horse riding department. Intelligence agency says that Kim Jung Un underwent some kind of surgery. However, they said he's in grave danger, which, makes him sound like an evil villain of some kind, which I suppose he is. Otherwise, South Korea said that they're not aware of any situations that are currently affecting the leader of North Korea. So we'll see how this plays out. Right now, the markets are down a little bit due to the uncertainty of a potential player on the world stage who has nuclear weapons and seems to have a pretty short temper. We also don't really know if he is seriously ill, if he does die, what happens after the fact. We don't really know exactly who takes over or what the situation for that is. Who knows? The bottom line is this injects some short-term volatility into the markets, Anytime there's a little bit more fear in the markets, they tend to dip. And I think that's what we're seeing today. All right, now that we finally made it through all the boring economic news, let's get to some jelly. So, Rob Gronkowski returning to the NFL after 1 year of retirement. Nobody really thought that this was going to happen. There are always rumors that Rob Gronkowski was going to kind of come back. But he was on a 1 year contract to the Patriots. But as we all know, Rob Gronkowski is in love with Tom Brady. So now that Tom Brady is going to Tampa Bay, looks like Rob Gronkowski is going to come back and try to go play in Tampa Bay with him. Rumors right now, Rob Gronkowski and a 7th-round pick in return for a 4th-round pick from Tampa Bay. He's going to have a lot of work to get back into physical shape to play in the NFL, but I'm really excited to see what he can do in Tampa Bay. I'm not sure anybody can stop them right now with the lineup they have, but can't wait to watch some football. So that's the jelly for this week. If you made it this far, thank you very much for listening, and please like and subscribe if you like content like this. I'm going to try to put these out once or twice a week in terms of the news and my thoughts on the economy. Thanks, and have a great week.